Hey, I think we want to see a founder that maybe spots that opportunity, sees a gap, and maybe it isn't quite venture scale, but is relentless in building, relentless and focused in maybe turning it into something bigger. So, yeah, a lot of great ideas may start with something small, and I think that's okay. And you can kind of build up from there. It works both ways, right? Sometimes that's the way you kind of orientate, and in other cases, you may start with a giant kind of ocean and then boil that down to, all right, what's the precise gap that want to focus? So I think one thing that's important probably for a lot of your listeners and to come through is there's no one size fits all, right? Everyone's different. Every market's different. Every business has started in different ways. But I think the one continuous thread here is there needs to be a giant opportunity to really attain quote unquote venture scale.
Most founders think VCs want a pitch deck that's full of market numbers, a roadmap, and a feel-good story about the future. Hoxton Ventures partner Payton Dobbs isn't looking for any of that. He wants to know how well you actually understand the game you're trying to play. In this conversation, Payton breaks down the tactical stuff founders almost always get wrong. Why TAM slides don't matter, how to define your real market, what early signals prove you have a painkiller and not a vitamin, and why most technical founders fail their first go-to-market quiz before the conversation even begins. He also talks about category creation, how to hire in the US if you're coming from Europe, why pricing is a strategic weapon, and the number one question he asks every founder, the one that quietly decides whether you're playing at venture scale or not. If you're an early stage builder, this episode will help you level up before you start meeting with VCs. I'm Walter Thompson. This is Fund, Build, Scale. I'm talking today to Payton Dobbs, Hoxton Ventures. Payton, thanks very much for joining me today. I appreciate it.
Excellent. Thanks so much for welcoming us. Excited to be here.
You recently transitioned over here to the US. Tell us about that move. How long have you been here, I guess? Welcome, first off.
Thank you.
Any culture shock?
Hey, it's a bit of a return for one, so it's nice to be coming back. We left about 8 years ago, so this is a nice to be back. And really, yeah, a combination of personal and professional reasons bringing us back. And obviously, it's something that for VC, for venture, the Valley is kind of ground zero, right? So we had a number of LPs asking us, in fact, when we were going to put someone on the ground here. So it was a nice confluence of events to finally make the move and try to build our presence here. We lean into California connectivity quite hard, and it's a big part of our thesis. So now we're walking the walk in addition to talking the talk.
So I want to talk about early stage fundability and what VCs are actually looking for. Something you said, we did a pre-interview, and something you said is that not all good ideas are venture scale.
Yes.
What's your personal framework for assessing whether a startup can actually scale up to become a billion-dollar company?
Yeah, totally. For us, we're big on new category creation, and that is something that helps define or helps at least orientate to, okay, is this genuinely a venture scale opportunity, something that can be big? And product is one thing, but product will change. It will evolve over time. It should evolve over time, right? But is the category genuinely new, interesting, and will it be pulling from other markets, other categories? So I always use the example of, hey, it's one thing to take share of an existing market. It's another thing to build and win a new market, a new category. So we lean into that quite hard. And yes, hey, it doesn't mean you need a precision or a giant DCF to kind of prove that out. But yeah, you should have a sense and an understanding of where is the money here? What is the value chain? And are you pulling from other markets, or is it a new category of its own? And what does that look like? You need to understand what that value chain is and kind of where you fit in.
Hmm. So if someone's in that process, right? And what if they what if they find themselves like I've done the bottom up and maybe this is more of a lifestyle or a boutique business. Are they still kind of or should they stop there or is that kind of the starting point for like no maybe this could be more?
No, hey, I think we want to see a founder that maybe spots that opportunity, sees a gap, and maybe it isn't quite venture scale, but is relentless and in building, relentless and focused in maybe turning it into something bigger. So yeah, a lot of great ideas may start with something small, and I think that's okay. And you can kind of build up from there. It works both ways, right? Sometimes that's the way you kind of orientate, and in other cases, you may start with a giant kind of ocean and then boil that down to, all right, what's the precise gap that want to focus? So I think one thing that's important probably for a lot of your listeners and to come through is there's no one size fits all, right? Everyone's different. Every market's different. Every business has started in different ways. But I think the one continuous thread here is there needs to be a giant opportunity to really attain quote unquote venture scale, right?
What are you looking for in a pitch deck as far as minimal, what's the floor for you?
Yeah, I'll say, well, from a TAM perspective, yes, you want to see a multi-billion dollar TAM, and obviously the larger, the better. Um, I personally don't get super hung up here on just TAM full stop. What I want to see is take that a little further. What's that serviceable, addressable market? I want to see some thinking and some logic, not just that, all right, there's a giant TAM that we're going to win 1% or 5% or 10% of. Um, so a lot of times that's unrealistic, right? I think what's important or what I like seeing is just some of the logic and some of the thinking of, all right, yeah, hey, maybe here's this TAM refined down to a SAM, and then we've segmented and seen, all right, in these countries, in these geos, in these sub markets, or here's how we're going to reach this category that we think is viable and how it's going to grow over time and why it's going to grow. A lot of big companies start with a very small, as I said, like new category creation. So it may start with a very small, nascent category. You look at Deliveroo, was an early investment of ours, obviously in Europe, food delivery. Here, the comp here in the US is DoorDash.
Mhm.
Before that, kind of the category of food delivery was really reserved for pizza, right? And kind of maybe fast food here and there. That's an entirely new category that was built out of technology that could, yeah, fit in your hand and GPS that drivers or riders could use. So that's an example of identifying like what may have been a small segment, but growing and building and really winning that over time.
When you're talking to founders at that really early stage, though, do you expect them to have that fleshed out in any way, or is that still
To
kind
be
of
honest, that's all secondary,
okay?
right? Primary is the product, the pain point, and kind of what they've identified as here's where they see something that nobody else does. And here's why they have expertise and experience that allows them to capitalize on that pain point. Um, Again, looking for painkillers, not vitamins. A lot of folks may have heard kind of analogy. And oftentimes it comes from a founder with deep technical expertise or deep market expertise that understands a problem that others don't and see it differently and see how to, yeah, build a commercial business around it.
So if you are a technical founder who doesn't have, DTM experience, has never done pre-sales, what would you suggest them as far as how they could kind of build their own framework for
Hey,
validating their idea before they.
hey, the first thing I would say is you're not alone, and that's not atypical and it's not uncommon. And in fact, it's almost expected from a venture perspective. Most founders are very deeply product or technically focused, and not all, right? But may not have that commercial or go-to-market kind of knowledge or experience or tangential. Um, so oftentimes that ends up being a nice pairing when you see co-founders that have complementary skill sets. That can work really well. And in some cases, there's solo founders that may not have that experience or may not have that anywhere on the team. And that's okay too. My point being that, yeah, primary is that pain point and the product and category. Secondary is, okay, how are you going to reach it? How are you going to attain it? And what we want to see is just some of that thinking and some of that logic. So your question on what would a framework look like or how would you go about it? I mean, to be honest, it starts with just due diligence, right? Like doing your own kind of investigation into what that market looks like. There's a lot of resources out there as you poke around the web, and depending on the market, it may be very different, right? What's helpful often I find is what are the comps? Like what have others done? What is the category? What are some of the pitfalls and some of the lessons learned that maybe other companies in the same space or adjacent spaces have made? What made them successful and what made others fail, right? So if you're an enterprise B2B SaaS kind of company, yeah, you may be looking at kind of a product-led growth motion. You may be looking at a freemium model potentially. Maybe if you're going consumer, you may be looking at different ways of reaching that market, kind of a traditional enterprise sales and land and expand approach. But what you want to see, most founders are quite smart and quite diligent. And you want to just see that it's something that they've thought about, something that they've considered and have an idea. And it doesn't mean, I think I've mentioned this before as well, it doesn't mean anyone's going to hold you to it until the end. Things can change, things can pivot. And as you go about, you kind of learn and adapt. And you just want to have a perspective. I just want to see someone that has a perspective, has an opinion, has a point of view, and can debate and kind of discuss.
What percentage of the founders you're working with are solo versus teams?
Large majority are teams, at least two co-founders, but we do in fact have solo founders. Company I invested in, Finster AI, is very much a solo founder and a sheet of paper, and that's okay too. That is the I'd say generally kind of the exception and not the norm, but 10, 20%, maybe sometimes some cases, some years, some segments, more, but does certainly exist.
Right now, what's going on in Europe as far as the AI ecosystem? Where is it and where is it headed? And where do you think this bubble is that we're in right now? Are we still very much the medium, the beginning of the bubble? Where are we? Where do you think?
Yeah, absolutely.
Sorry, that's a lot to unpack in one question. Maybe it's too unfair.
I'll start with the first point on where's Europe. And what I would say is Europe is having a moment. And that's not just us saying it. That is the market and the results speaking for themselves. And Hoxton and Hussein, our founder, were very early in identifying that, 13 years ago, setting up Hoxton Ventures, and now it's really coming into fruition. They saw the gap in the market where there wasn't a lot of funding for early stage seed, pre-seed business. So that was kind of the genesis. Today, and what we've seen is certainly with AI, there is a moment happening in Europe that is accelerating the market. So when I say, don't just take our word for it, look at the results. Deal Room just announced their first half 2025 global unicorns. So any unicorns that have been created just in the first 6 months of this year. In 2017, Europe represented less than 5% of all unicorns created. First half 2025, Europe makes up 20%. So that's remarkable growth. And that's really something that's not just by chance or happenstance either. There's been a lot of venture investment that's gone into Europe, but there's also a lot of talent that is now looking to build, fund, build, and scale, right? So if you look at just academic institutions, Europe has always been strong when it comes to academia and research. And you look at schools like obviously Oxford, Cambridge, ETH in Switzerland, and beyond. Now that moving into what you saw was research, and you saw companies like DeepMind coming out of Europe. Then now you have Meta's FAIR team in Paris, led by Jan LeCun. You have Apple's AI Center in Zurich. And then even a lot of that original founding team from OpenAI even came from Eastern Europe and the Netherlands. So you're now seeing what was a very similar transition in the US of kind of unicorns beget unicorns, success begets success, right? And as Europe had some early wins on the board with companies like Skype and Spotify, et cetera, you've seen, some of those technical teams go on and found subsequent companies as well.
Yeah. So the recent news with the H-1B visas, I'm kind of wondering what you think as far as how that's going to change the math for not for huge tech companies that can, for them, an H-1B visa is a rounding error, 100K in a year. So, but for smaller companies, seed stage, and for you as an investor, what do you think as far as like if you're trying to incubate talent in Europe and then bring it to the US to scale it, does that 100K present a big barrier suddenly?
Absolutely. It's not an insignificant amount. And then certainly when you look at that being an annualized basis, right? It's not just a one-time upfront fee. That's an annual annuity that you have to pay on those visas in every hire. So personally, I think that does create a barrier and a challenge for the US. It may be to the benefit of places like Europe and India and beyond. So I think it will create challenges, particularly in early stage, as you mentioned. There's still other visas that exist and other ways to build in the US and hire in the US and support the ecosystem in the US. But I do, in fact, think like Europe will be a beneficiary of at least talent moving there. And then our thesis still holds regardless in terms of what we often say is incubate in Europe, export to the addressable market of the US. The addressable market of the US is very, very important, particularly in building large unicorn size opportunities and decacorn and bigger businesses. And that doesn't change. Multiples are higher in the US. Consumer spending is higher in the US. Valuations, exits, all of these reasons exist to still come to the US. It just means that, yeah, hey, there may be some challenges and hopefully shorter term pain that ultimately relieves itself over time to making that let's have less friction.
Right. I mean, I can easily picture a European founder, a CEO, coming over here to do an expansion or kind of go to market kind of effort over here. But it wouldn't pencil out to bring over the engineering team or the product team. That wouldn't.
No, and hey, even that's something that we've always leaned into. Dev teams in Europe, and then in particular Eastern Europe, are on talent is on par, and off in some cases parity, if not ahead in some ways, in some facets of AI. And yes, salaries are lower in Europe. It's more competitively priced. So we often recommend, keeping dev teams in Europe. So it may not make as much sense to move those over. It really is. It's commercialization and go to market that the U.S. has clearly a leg up, just given the size and scale of the market. And yeah, hey, hire here. And we do in fact have founders that have we've multiple founders that moved over to Europe to build those teams out. If you look at, we have companies in our portfolio like Druid AI, Giraffe 360, Avantia Law, even Finster, as I mentioned earlier, where they're building out that US presence exactly for those reasons.
What are some of the biggest mistakes EU founders make when they try to enter the US?
Yeah. Like first, I would say one on go to market, the first mistake I would often say, not just in US, but also anywhere that certainly applies is if you build it, they will not come. And I think everyone has to realize there is an aspect of just because it's been built doesn't mean they are going to come and it will, that product will speak for itself. So yes, there's absolutely a component of having to do the hard yards and put yourself out there, put your product out there, and kind of build that flywheel.
Well,
In
actually,
terms
just
of
jumping in for a second, if you're expanding to the US, does that mean by default you have to kind of reboot your entire customer discovery process to find that repeatable success thing you can do over here that you were doing at home?
Not always. Sometimes, the market is a little different and nuanced. It's not always the same, but it doesn't mean reboot. Certainly, if you've found, and we often say, like, when you find that early product market fit and that spark, right? That's something to foster and build and scale from.
Mhm.
Sometimes it's not too different market to market if you see that working, but you need to test it. And I was working with a company of ours recently that has a consumer product in the glucose monitoring space. And we actually found that customer acquisition using the same tactics, company's called Viv, it's for weight loss management, using a GCM.
Mhm.
And we actually found that customer acquisition was cheaper in the US using the same tactics and same kind of approach that was working in Europe. So I think that's a great example of, wow, there's just a bigger pool, a bigger pond to fish in, and the same mechanic may work. Now, other markets, and I would say particularly as I was referencing, enterprise, B2B SaaS, that is a competitive space. It is very dynamic and it is very nuanced. And in that case, the competitive landscape plays a significant part in terms of how your go-to-market needs to be built.
Mhm.
And sometimes, and often in Europe, the competition is not as relentless as it is in the US, or the way of buying and the way of customers kind of evaluating can be different. So again, it's case specific, and you have to really deeply understand your customer, your market, your segment that you're going after, and talk to them. Understand, do those, again, the hard yards to understand what that looks like and how it may be different. And then when you find something that's working, that is kind of when you rinse and repeat.
How about the hiring aspect? Because like I said, in that use case of European
Right.
founder coming over here, trying to, hire probably, I'm guessing, it's going to be something outward facing like marketing, sales. Maybe they got to hire a PR team, that kind of thing. What are some of there are huge cultural differences between working in
Totally.
Europe and working in Silicon Valley or with a Silicon Valley mindset. Like I feel, for example, like a lot of European founders might be taken by surprise by grind culture, which their employees
Yeah.
would have, but they wouldn't be promoting. So like what are some of the mistakes or kind of missteps or things to look out for when you're a European founder coming over here to build the team?
Yeah. Hey, the markets are different, and the employment laws are different as well, right? And I'd say generally Americans are better at selling and better at selling themselves as well, right? So there are things that founders need to be prepared for and understand, but there are also some core attributes and facets that no matter where you're interviewing or what side of the pond that you're looking for, right? So you're always going to be looking for that capacity and kind of role related knowledge, someone that understands the function and has shown that propensity to deliver, right? You're going to be looking for kind of, cognitive ability and ability to learn and push themselves. Again, you said kind of that hustle culture. That's I would fall under a third bucket, which may be kind of a cultural aspect. And I don't mean cultural in terms of, oh wow, I like this person, or they're nice, or I could see ourselves working together. No, it is those qualities that you're saying of, is it, yeah, hey, willing to go the extra mile or roll up their sleeves or do the work themselves or think outside the box. Those are things that are more unique to a culture that may or may not be the right fit, right? And that's something that founders need to, yeah, interview deeply around to understand what drives people, what motivates people, and whether they're a good fit. So I think it's also understanding your own culture. What is important to us? What do we look for? What do we value that maybe other companies do not?
Hypothetical. You're on a flight from London to SFO. You find yourself, your seatmate is an early stage, a seed stage founder who just closed around and they're using it to expand to the US. Um, you're pulling into the gate. They're about to get the sign. You can get out of the seat and take out into your overhead. What's your parting advice to this person?
At a high level, I would say, just as you mentioned a moment ago, of grind, push, drive, and be relentless. There's a lot of competition here, right? And you have to drive and kind of grind to win. And it's not something that, as I said, if you build it, they will come. It's not something that's going to walk in the door just because you're here. That's step one. That's baby step one of many
Hmm.
to come. So you really have to put yourself out there and um, yeah, network and and frankly, kind of outwit and outbuild others if you're going to be successful. And I think that is what, just by being here, having feet on the ground, you see so much more and can feel and sense the energy um, and just enthusiasm to build unique things and innovate. And that's a really, hopefully, inspiring thing that either people are enthusiastic about and inspired by or not. And that's something that, is in innate and a lot of people that come here to the Valley and hopefully see for themselves.
You built global sales ops at Nest from scratch, pretty much. What are the first 2 to 3 things a founder should look for before hiring their first international sales rep?
So I have to give credit to Harry Tannenbaum, who started and built kind of the underpinnings of what became sales operations at Nest. He and Matt Rogers have gone on to found and start Mill, which is an incredibly talented and inspiring product and company and business of its own. But that was really kind of the torch that he handed off, and I kind of ran with at Nest. And yes, those early days of kind of building and scaling sales operations is really, really important. Again, post product market fit, you have something that's working, you have something that's generally repeatable, and now you want to scale that sales function, that commercial organization non-linearly with your business, right? You want to be more efficient in your sales and revenue growth, than your resourcing and staffing at a very high level. So there are many ways to do that. And I often go to tools, systems, and process before people, or just throwing people at a problem. And that's something learned very early on in Google's early days of, yeah, hey, thinking and looking at ways to scale things more systematically rather than just throwing people at a problem. So tools, systems, and process is really, really important to me and important to scaling a sales organization or really any business. Again, in that post product market fit. And then it's augmenting and building on top of that, right? So, for us at Nest, we obviously had a consumer product that was working really, really well. That also didn't happen overnight, right? That took a lot of blood, sweat, and tears from a lot of talented folks before I joined. And then upon that, we built out our head of our professional channel, Gene Lanoy, built a pro business in going out to HVAC installers, right? And then we had folks like Jeff Hamill that built a enterprise utility business on top of that, going to that channel. So there's a lot of ways where it's not just where you start, but then what you build to. And those sales motions, those commercial engines may look very different. And what's really important is understanding and tying the dots together on kind of how they create or may create a flywheel of their own. So I always use, there's obviously the Amazon flywheel as a model. And I always used for us, wow, there was a way by which at Nest, we saw in our customer surveys, the first place that people found out about Nest became retail, which was actually really interesting to us. Even with the brilliant marketing we were doing that was incredible, we still saw that people, again, when you're building a new product and first putting it out there, people first learned about us in retail. Mm-hmm. So as someone may learn about us there, maybe purchase a product there, like a thermostat, then obviously we would remarket to them and maybe cross-sell, upsell direct through email channels, whatever it may be. They may have a professional installer that comes install the product through that professional channel I mentioned. They may get a rebate from the utility in their region where they live, and then again come back to that retailer or online as we have a subscription or have other products that we launch into the market. So it's a brilliant flywheel that can work really, really well as you understand your business and the various channels and means to your customer.
It's kind of a value chain. I mean, what would you call it exactly? Kind of creating a like kind of the stacking your way up to,
Yeah, exactly.
Business.
Exactly. As I was talking about kind of TAM and SAM and how you address and, as you said, go to market, right? You have to understand that value chain. Just like, where is the money today? Who accrues it, and where may it change, right? But you have to understand, have to start with a fundamental understanding of just where is the value, where is the money, and where does it exchange hands? Who has leverage in those equations, and where do we belong? Where do we have a right to belong? And then how do we accrue value?
I think for a lot of founders, I think that might be like one of the bigger challenges is kind of envisioning, because like the product you build and launch with is not the thing you're going to exit with or, be acquired for. Things are going to change a lot along the way, but it's hard to creatively imagine all these different iterations or instances or multiverse theories of, you and your company.
Absolutely. And that's why at the end of the day, it is founder, right? It is that founder that's going to pivot that product, move in that category, and identify, and really has to be laser focused on, all right, hey, how do we build a venture scale business, a multi-billion-dollar business out of this product out of this category.
Yeah. Yeah, that reminds me, there's a gag in that movie Airplane where somebody hands somebody a report. It's very important. It says, Tommy, what do you make of this? And he says, well, it could be a hat, it could be a brooch, it could be a pterodactyl, you know.
Exactly.
Um, what are some of the signals that help you spot whether a founding team can actually move from like tech to traction, from like the workshop into the marketplace?
Hey,
Because I know there's got to be one person on that team who can sell, but beyond that, like what else do you need to see?
what I want to see unequivocally is agility, and speed, and ability to iterate, and agility. That's what's really important to me, and I think that's what I see as a critical success factor, right? You obviously have to be focused, as I said, like laser focus on whatever that problem, whatever that pain point may be. But you can't be too married to a singular approach of the product market or the way of working or whatever it may be, because things will change, things will evolve. The market, if not anything else, the rest of the market around you will change.
Mhm.
You have to be adaptable. You have to be and show a willingness to hear others out and hear other perspectives, learn from them, and iterate. It doesn't mean that you have to take everyone's word and run around and do things different every day. But hey, folks that can kind of pattern match, assimilate a market, understand and see what's happening, take advice in from others, and adapt and evolve, I think is ultra critical to being successful. And a lot of folks will say, and I don't dismiss the fact that, yeah, you have to be relentless. And when I say, I think you have to be laser focused on that pain point, on whatever it is that you are building. And my point of view is just be open to other perspectives, be open to pivoting and adjusting as the market may evolve and change itself.
If you're entering a market where you don't have a sense of what a tube of toothpaste costs, how do you price thoughtfully when you're barging into a new market with a new category?
So I love pricing as a concept and as a function. And I'll be the first one to say pricing is an art and a science. And I think oftentimes a lot of us kind of probably gravitate to the science of it. Well, hey, what do my competitors cost, right? If you look at a company like Nest, I would say, which was really built from Apple DNA, you also have to understand the art of pricing, right? Apple effectively takes a lot of commoditized components and products, wraps them in a beautiful user experience and obviously beautiful industrial design, and accrues a value, a premium that no others can. And if you were looking at Nest early days and said, all right, this category is full of cheap plastic $10 thermostats that sit on the wall that no one thinks about,
Right.
and we're going to launch something that's 25x the average cost, people would say you're crazy. So the component of, but Nest built a beautiful brand and a beautiful technology in a category that was old and stale and had value that was kind of untapped. When you look at the expense of energy consumption and that 50% of a household expense is in energy, wow, that was kind of the canary in the coal mine of there could be something to this. And when I say the art and the science, it'd be very easy to just look at the science of pricing and say, all right, this is what Honeywell products, this is what the competitive landscape looks like. We want to position ourselves competitively priced or at a slight premium and just kind of go that way, or price slightly lower than the competition and win on price. That, in my opinion, is kind of a fool's theory in terms of again, bringing in this art of what is your positioning? What's your product positioning? What is your product value? And how do you, again, accrue outsized, disproportionate value relative to others? I'd also say this doesn't have to be on day one or day zero either. Um, Oftentimes, and sometimes maybe it is that I reference that like freemium model. This is what's really important just to understand your customer, your market, and what you're going after. But maybe you intentionally want to give away your product for free, right? Just to get exposure and to get people on the platform and using it.
Mhm.
And then maybe you have a product-led growth kind of approach whereby, yeah, you're introducing tiers or features that then people end up paying up for. That is not uncommon and it's not unheard of. And that's why I say like the model can evolve and adapt, but you have to understand like what you stand for uh, to start with and understand what your market looks like and kind of build out from there. But point being, pricing, do not forget the art in addition to the science of pricing.
Mhm.
And you can't have one without the other either. You can't just say, I'm going to go out here and price 10x relative to everyone else and expect people to walk in the door.
Right.
Um,
They'll just see the
so
value.
exactly, you have to have value. And this is an important piece that we often look at and that I think you'll see a lot of folks say that you want to see kind of a 5x or a 10x in delta, and that can be in value, in speed, in whatever it may be relative to the incumbents or relative to the competition or relative to whatever may exist in that kind of new category you're building or that market you're launching into. You have to be orders of magnitude better than someone else for people to jump ship or for customers to move. And some categories are stickier than others, right? And folks aren't going to move for a 10% incremental improvement or 20, even 20%. Things need to be orders of magnitude better, faster, quicker, or higher value in order to really make that compelling case.
Are the European founders you work with as fluent or as are they using tools like NPS and customer surveys as much as they are over here in Silicon Valley, or is it a mix?
Hey, yes, I would say it's a mix at the end of the day, like anywhere, but yes, NPS. And in fact, I work very deeply with a consumer hardware portfolio company of ours called Rolly that has a learning piano that's amazing. If you haven't seen it, they just launched a new product called Airwave, which is video hand tracking, incredible technology. They track consumer metrics, customer acquisition costs, lifetime value, on par with anyone else that I've seen in the US or elsewhere, and is very, very important, very core to their business and how they manage the health of their business. So all those concepts are, yeah, very common and very relevant. And what I would say is, in addition to those kind of baseline metrics or kind of baseline health metrics, also identify what's really important to you. For us, in that case, we also saw that, wow, there was an engagement metric that was really important that helped kind of as a leading indicator for customer retention
Mhm.
and subscription renewals, right? So you have to not just look in the rearview mirror when you're looking at metrics. And I would say, like, yeah, we're just reporting the weather. I don't want to know what the weather was yesterday. More importantly, I want to know what do we think the weather is going to be tomorrow and a month out and a quarter out and a year out. What are those forward-looking um, indicators and kind of metrics that are really important to your business? Understand those deeply and optimize for them, build for them.
You're Hoxton's first partner in the ground here in the US. What specifically are you hoping to unlock by having someone based here full time?
Yeah, absolutely. First and foremost, it comes down to supporting our founders. And that's number one in my remit is helping our founders expand to the US. And for some of our founders, they may already be on the ground here. For others, in a way, I may be their first person here on the ground. And that's how I want them to think of me, is think of me as an extension of their team.
Mhm.
We invest pre-seed and seed. So sometimes, yeah, really it is one person and a sheet of paper, as I was saying. And I can be those kind of boots on the ground to help them have a pulse or make introductions, or as they're building product, just have a friendly face that's in the market that they may be looking. So, hey, understanding and helping our founders expand from a commercial perspective is really important. Second piece is to help them navigate and ultimately secure follow-on funding. We have lots of great VCs in Europe. There's also great VCs here, and obviously more plentiful in the Valley, and particularly in kind of what we see as kind of a funding gap later kind of growth stages post Series A in Europe, which is improving and getting better, but there's just more capital to be allocated here in the US. And we want to help our founders secure, again, like their fair share of that funding as well. I also am working very closely and engaging with kind of what I'd say like big tech corp dev, just understanding what they're looking for in the market when you start to look to either commercialization and potential customer prospects for our portfolio companies, partnerships, and also maybe exit opportunities down the road as well, right? Understanding what they're looking for, what corp dev's looking for, what big tech's looking for, and then understanding and putting our portfolio companies on their radar as well. So it's multifaceted reasons for being here, and still early. Been here 2 months at this point, but we're trying to make a name for ourselves and build a lot of these relationships that can help, hopefully, both sides of that equation.
And so just so listeners know, which sectors are you most interested in?
Yeah, so we are sector agnostic, right? So we invest across all sectors. As I said, from a stage perspective, we're early stage, pre-seed and seed. But from a sector perspective, we are a little more focused and over-index, a little more on kind of enterprise B2B SaaS. We have a pretty significant deep tech portfolio. We have tech bio within our portfolio. We have consumer as well, fintech. Also, we do a little of everything, and really, we're looking for big scale, new category creation opportunities. And we're not sector focused as a result, particularly for reasons in Europe where the market hadn't been as broad as the US,
Mhm.
but also because we're not going to say that we're the one that can predict what the next category is going to be or where the next unicorn is going to spawn from. So we want to be open to hearing anyone out, no matter what kind of category they're building. Obviously, everything under a halo of tech, but we're quite open in that capacity.
It's like going back to something you talked about earlier as far as commercialization and the strong academic, ecosystem that feeds tech in Europe. One of the things I think I know from my distance over here is that the crossing that gap to, from commercializing academic ideas, like taking those ideas from the lab and out into the
Yeah,
marketplace, it's historically been some challenge there. I know you recently partnered with NVIDIA to help
yeah.
AI startups in the UK. Tell me about that as far as like your goals for that and kind of your vision for that program and how
Yeah,
companies
exactly.
how they can get a piece of that if they're eligible.
Hey, it was great to be selected. So we're one of five venture firms that NVIDIA partnered with in the UK to help them support the ecosystem. So NVIDIA has dedicated $2 billion to investing in the UK ecosystem. And we are collaborating with them to help foster that next phase of growth in venture in the UK. And a number of our portfolio companies already work with NVIDIA and already partner with them. So companies like Cusp AI, who's building next gen material science exploration company, that has Jeffrey Hinton and Jan LeCun on the advisory board, um, partnered with NVIDIA, with companies like Peptone and Milvus and others that are quite close to NVIDIA and dependent and contingent upon their support and technology, right? As you look at AI, NVIDIA is a critical underpinning for a lot of these businesses to succeed. Another company, Magenta, that's leveraging their technology, and some that come out of academia and out of research institutions in the UK, as this top talent that I referenced earlier. So we're super excited to partner, super excited to work together in collaboration, and we see a lot of those founders that have come from those institutions that we want to support and succeed in commercial outcomes.
So your focus is pre-seed and seed. Do you have can you give us a ballpark as far as check size typical?
Yeah, absolutely. So for us, what typically check size looks like on a pre-seed investment is somewhere between 500K to maybe 1.5 million. And then a seed round, anywhere from 1.5 to 5 or 6. We lead rounds in our investments. We take board positions. We are very active. We are a partner-only firm, kind of that benchmark model, which is rare, unique approach. We all have an equal vested interest in our portfolio company's success, and we want to see all of our portfolio companies succeed and have equal access to partners on our team as well.
You scaled companies as an operator. Now you're backing founders. What's one lesson you had to unlearn when you stepped into VC or sitting on the other side of that desk?
One thing that's been really hard for me to evaluate is not just, is it a good idea, or wow, can this business be successful? And that's something that naturally I want to, as an operator myself, I love building and I want to help and I want to see succeed. And the really tough thing about this job is it's not just supporting companies and businesses that you think can be successful. It's about really identifying founders and companies that can be venture scale outcomes. And that's a different evaluation than just whether this is a good idea or not. So that also is an art and a science, like we talked a little bit about earlier. And it's tough because you have to unmarry that aspect of yourself where you may just want to help and may just want to invest because you think something is a good idea. No, it really needs to be a significant outcome and a significant scale to make sense.
How often is it that you actually see that during the initial pitch or your first discovery meeting with the founder?
I think that's one of the pattern recognition aspects that people talk about, right? And someone like myself that may be newer in that capacity takes time, right? For me, as I said, it's easy to see the good ideas and the good founders. Like that's actually the fun part and the fun aspect of the job. For me, it takes diligence, and for us all, you have to diligence new categories. Yeah, hey, there's some areas where I have background like fintech, or consumer electronics or hardware or media and ad tech. Those just come natural to me, but because we're sector agnostic, we're looking across all categories, and yeah, hey, it takes homework to do to identify and investigate whether something, has potential to be big or not. What does the competitive landscape look like? What is the TAM, SAM, et cetera? And some of those things, no, I don't have off the cuff all the time and have to do my own homework versus, you know, folks that have been professional investors their whole career may broadly understand the different categories and aspects of TAM across different sectors, just given experience. So that's something that even myself is building and ramping on also. But that's the fun part of the job. I love digging in and seeing, how things work, and then helping support our founders, as you said, kind of fund, build, and scale. And I love that building and scaling aspect. And that's really where I come in.
Nice. A given week, approximately how many founders do you talk to?
Hey, first off, folks should understand and know that we see thousands of deals that come through and thousands of pitch decks that come through. So those ultimately kind of have to be whittled down, right? And we probably, as a firm, may take 100 meetings a week with different founders. I would say would not be uncommon across all of our partners and venture partners. And for each of us on any given week, that may look like anywhere from 5 to 10, 20 even, right? Or in different capacities, even more if you're talking about going to events and seeing, multiple founders at a time. So it takes different shapes and forms. And I think that's an important thing to understand, to be flexible. Sometimes you may meet a VC at an event. Sometimes it may be a cold email. Ideally, it's a warm introduction. And that's really important, to have some of that recourse, someone that that can vouch for you and kind of make the case and say, hey, this is a upstanding founder that you should take the time to connect with or meet with.
How can people get in touch? What's the best way to pitch?
Hey, for me, Payton at HoxtonVentures.com is an easy way to reach out. And generally, hey, I'd say there's most VCs across the board have ways to submit a pitch on their website, just like we do. We all have LinkedIn, all have email. I will always go back to that warm introduction is absolutely the best way. So, hey, just trying to identify and see how you're connected. And then doing a little bit of homework and understanding, all right, why is it this VC that you want to connect with as a firm? Understand what they do, what they focus on, and then why one particular partner rather than others.
Mm-hmm.
Do some of that diligence and some of that legwork before just peppering out to the world. But again, have a reason for that connection, and ideally, it comes from someone that you may know.
Here's my final question for you.
Yeah.
If you were interviewing for a job with an early stage startup, what's one question you'd have to ask the CEO before you could accept the offer?
The one question I would want to know is, how big do you want to build this? And I would want to hear that directly from the CEO founder, to understand that they have the same ambition that I do. And that is really important. And it's one thing just to say, yes, I want to be $1 trillion company, right? It's another thing to actually show why, have the conviction, and then have that kind of relentless appetite to achieve it. And that's something that should be really important to anyone joining any early stage company or VC or anywhere else. You want to have a shared ambition. And that goes a little bit back to your point on, hey, that hustle culture, or that grind culture, whatever you want to call it. If you're hustling or grinding after something that you are motivated by and something you're ambitious about, then it no longer feels like hustling or grinding. It's just part of who you are. And I'd say, like, identify, try and find that innately in you that is what motivates you. And I think that's where you want to be on the same page with a founder and see that come through.
We'll end it there. Payton, thanks so much for a great conversation today. I really appreciate it.
Absolutely. I appreciate it, Walter. Thank you for having me on, and look forward to hearing from others.
Thanks again to Payton Dobbs for joining me on the show. The Fund, Build, Scale theme was written by Michael Tritter and performed by Michael and Carlos Chairez. Michael also composed Ocean, the track you heard at the top. If you enjoyed the episode, please subscribe and leave a rating. It helps more people find the show. You can get the Fund, Build, Scale newsletter on Beehive, follow along on Instagram, and if you have a guest suggestion or a question, reach me at fundbuildscale@gmail.com. Thanks for listening. Fund, Build, Scale is a production of Truth and Soul Media, LLC.